What's up, everyone? Logan Freeman here with Midwest CRE Advisors. Today, we're breaking down the Kansas City Chiefs' move to Kansas. And this is one of the most significant commercial real estate stories in the Midwest right now. We're talking about a $4 billion catalyst event that's going to reshape Wyandotte and Western Johnson County over the next 6 years. If you're in commercial real estate development or you're just following the market, this is required listening. Let's get into it. On December 22nd, 2025, the Kansas City Chiefs and the state of Kansas announced an exclusive public-private partnership for a new domed stadium. This isn't just a stadium deal. This is a two-phase, $4 billion sports-anchored mixed-use development project. Here's the structure. Phase 1, a $3 billion, 65,000-seat domed stadium in Wyandotte County at the intersection of I-70 and 435. That's near the Village West Entertainment District and the Legends shopping area. The stadium opens at the start of the 2031 NFL season. And then we have Phase 2. Phase 2, a new Chiefs headquarters and practice facility in Olathe in southern Johnson County, plus $1 billion in ancillary development. That includes retail, restaurants, hotels, office space, medical facilities, and residential, with at least 10% designated as workforce and affordable housing, community parks, and structured parking. The total project budget is $4 billion, $3 billion for the stadium and $1 billion for everything else. But here's what most people are missing. That $4 billion number is almost certainly low. We'll come back to that. Kansas is financing 60% of the stadium, up to $1.8 billion, through STAR bonds. That's sales tax and revenue bonds. They're also putting up to $975 million toward the mixed-use development in 3 tiers. That means public financing is capped at $2.775 billion. The Chiefs are responsible for the other $1.225 billion, plus any cost overruns. Now, here's the part that should get your attention. Kansas amended the STAR bond law specifically for this deal. They extended the repayment period from 20 years to 30 years, and they increased the public financing cap from 50% of project costs to 70%. They literally rewrote the rules to make this deal happen. The tiered structure for ancillary development goes 60% for the first $500 million, 65% for the next $500 million, and 70% for the final $500 million. That's how they're justifying $975 million in public money for mixed-use development on top of the $1.8 billion for the stadium. STAR bonds are repaid over 30 years using sales tax increment revenue. That's new sales tax collected from businesses inside a massive STAR bond district that covers most of Wyandotte County and a big chunk of Western Johnson County. For existing businesses that fall inside the district, only the incremental revenue increase gets used to pay down the bonds. But that's still a diversion of tax dollars that would otherwise go to schools, roads, and public services. Kansas is also tapping 65% of its sports betting tax revenue to help cover bond issuance costs. As of October 2025, that fund had a $26.2 million balance. So to be clear, Kansas changed the law, extended the repayment window to 30 years, and is betting that sales tax growth will cover the debt. If it doesn't, taxpayers are on the hook. Let's talk about ownership and rent, because this is where it gets really interesting. The state will own the stadium through a quasi-governmental entity. The Chiefs will lease it for an initial term of 30 years, with 6 optional 5-year extensions. That's a potential 60-year occupancy term. The Chiefs will pay $7 million per year in base rent, escalating annually by the greater of 2% or the rate of inflation. But here's the catch. That rent money doesn't go to the state. It goes into a separate repair, maintenance, and operations fund that the Chiefs control. Kansas also contributes at least $10 million annually from sports betting revenue into that same fund. So the state is putting in more money than the Chiefs are paying in rent, and the Chiefs control how it's spent. The Chiefs are essentially paying rent to themselves for stadium upkeep. And here's the final piece. The Chiefs retain 100% of revenue from tickets, concessions, parking, suite sales, naming rights, sponsorships, personal seat licenses, and all mixed-use development operations. Zero property taxes because the state owns the building. This is the most favorable stadium deal in NFL history. Now let's talk about something nobody wants to say out loud. This project is not staying on budget. The agreement states that any cost overruns are solely the Chiefs' responsibility. But when has a $3 billion stadium project ever come in on budget? SoFi Stadium in Los Angeles was supposed to cost $2.6 billion. It ended up over $5 billion. Allegiant Stadium in Las Vegas went from $1.8 billion to over $2 billion. Mercedes-Benz Stadium in Atlanta came in close to budget, but that's the exception, not the rule. If this project runs north of $4 billion, which is likely, the Chiefs are contractually on the hook for the overage. But here's the risk. If the Chiefs hit financial stress or construction stalls due to cost issues, they will come back to Kansas asking for relief or amendments to the deal. That's the playbook. It happens every time. And Kansas will face a choice. Let the project fail and lose the entire investment, or renegotiate and put more public money on the table. The 30-year bond repayment window gives Kansas a long time to hope the revenue projections work out, but it also locks taxpayers into 3 decades of risk. Kansas officials are projecting big numbers. They claim the project will generate 20,000 jobs during construction and deliver $4.4 billion in economic impact during the construction phase. After that, they're projecting over $1 billion in annual economic impact. Now, here's the reality check. Decades of academic research on publicly funded sports stadiums consistently show that these projects rarely deliver the promised economic return for taxpayers. The benefits tend to be concentrated with the team owners and nearby landowners, while the costs and risks are socialized across the entire state. The Chiefs get 100% of the revenue. Kansas taxpayers are on the hook if the sales tax projections fall short and the bonds underperform. That's not an opinion. That's how the structure works. So who actually wins in this deal? Let's break it down. Number one, the Chiefs organization. They're getting $1.8 billion in public money for the stadium alone. That's the largest public subsidy ever for a U.S. sports stadium project. They pay no property taxes. They control 100% of the revenue. They control the naming rights. They control the mixed-use development. Their rent payments cycle back into a maintenance fund they oversee. And they have a 30-year non-relocation agreement with damage clauses that decrease over time. If they leave in year 29, they only owe back 6.25% of the public contribution. This is a generational wealth transfer to the Hunt family. Winner number 2, landowners and developers near I-70 and 435. If you own land within a mile or 2 of that intersection right now, your property just became exponentially more valuable. A 65,000-seat domed venue that can host Super Bowls, Final Fours, concerts, and year-round events is a massive catalyst. The Village West and Legends districts are about to see a surge in demand. Multifamily, hospitality, retail, office, everything in that corridor is going to feel upward pressure. Winner number 3, commercial real estate players in Wyandotte and Johnson counties. The mixed-use development mandate includes retail, restaurants, hotels, office space, medical facilities, and residential. There's a requirement that at least 10% of residential be workforce and affordable housing. That means developers, brokers, lenders, and investors who understand the timeline and can move fast are going to capture significant value between now and 2031. You've got 20,000 construction jobs coming. You've got ongoing operations jobs. You've got ancillary demand for housing, food and beverage, and services. If you're in CRE and you're not tracking land acquisition, entitlements, and rezoning activity in this corridor right now, you're already behind. Winner number 4, Olathe and Johnson County. The new Chiefs headquarters and practice facility will be located in Olathe. With it will come jobs, corporate presence, and ancillary development. Johnson County gets a piece of the $1 billion mixed-use build-out with tiered public financing, 60% of the first $500 million, 65% of the next $500 million, and 70% of the final $500 million in development costs. That's a meaningful economic development play for Johnson County. Now let's talk about the risk that most taxpayers don't understand. Star bonds are paid back with sales tax increment. That's the new sales tax revenue generated inside the Star Bond District. The state is betting that the stadium, mixed-use development, and surrounding economic activity will generate enough new sales tax to cover 30 years of bond payments. But what happens if the sales tax revenue underperforms? What if there's a recession? What if competing entertainment options pull spending away from the district? What if the mixed-use development takes longer to lease up than projected? The bonds still have to be paid. And if the sales tax increment doesn't cover it, Kansas taxpayers cover the shortfall through the general fund. That means money that could go to education, infrastructure, and public services gets diverted to pay off bonds for a privately operated entertainment venue. This is a 30-year bet on continuous economic growth and consumer spending in a specific geographic area. That's a massive risk. And here's the other issue. Existing businesses inside the Star Bond District will see their incremental sales tax growth used to pay down debt instead of funding local services. That's a real cost to those business owners and the communities they're in. Research from economists like Andrew Zimbalist and Roger Knoll has consistently shown that publicly funded sports stadiums do not generate net positive economic returns for taxpayers. The promised jobs are often temporary construction jobs. The permanent jobs tend to be low-wage, part-time positions, and the spending at the stadium often just displaces spending that would have happened elsewhere in the local economy. So when Kansas officials say this will generate $1 billion in annual economic impact, understand that those projections are almost always overstated. The economic impact studies used to justify these deals are notoriously optimistic. The Chiefs get all the upside. The public carries the downside risk for 30 years. But here's the thing. Whether or not this deal is good for Kansas taxpayers, it's happening. And if you're in commercial real estate, this is a massive opportunity. The stadium is opening in 2031. That's 6 years away. Land acquisition, entitlement, and pre-development are happening right now. If you're a broker, you should be building a database of every parcel within a 2-mile radius of I-70 and 435 in Wyandotte County. You should know who owns it, what the zoning is, and whether they're open to selling. If you're a developer, you should be exploring multifamily, hospitality, and retail opportunities in the corridor. The mixed-use mandate creates immediate demand. If you're an investor, you should be underwriting land plays and value-add repositioning opportunities in Wyandotte and western Johnson County. The smart money isn't waiting until 2029. The smart money is moving now. And here's the broader takeaway. This is a case study in how large-scale public incentive deals create CRE opportunity, even when the economics are questionable for taxpayers. Your job as a commercial real estate professional isn't to debate whether the deal is fair. Your job is to understand the deal, identify the opportunities, and execute. So here's my question for you. Does this deal pencil out for Kansas taxpayers, or is it the biggest public subsidy giveaway in sports history disguised as economic development? I think the answer is pretty clear. But either way, it's a $4 billion plus catalyst event, and the clock is ticking. If you found this breakdown valuable, share it with someone in CRE who needs to hear it. And if you're working on deals in the Kansas City market, reach out. I want to hear what you're seeing on the ground. Thanks for listening. This is Logan Freeman with Midwest CRE Advisors. Let's go make some deals.